Bitcoin is a meme, the markets are red, but are we due for a bounce? Hey guys, Sheldon Evans here, welcome back. Or if you're new here, don't forget to hit the subscribe button and turn on all of those bell notifications so that you don't miss time-sensitive videos like this one. So on my display right now, I have the Bitcoin US dollar chart open, and I'm sure you're all very well aware of the flash crash that we've had in the past 24 hours. In fact, the biggest flash crash that we've had since the major crash back in May. But all is not lost just yet, and I'm about to show you why. So I have these two trend lines drawn on my chart, and I've had them drawn here for the past few months to keep a close eye on the state of the market. Now, even though we did break below both of them, we did have a very quick bounce back above the bottom trend line here, where we did peak out at the bottom of $42,000. And that's why I said Bitcoin is a meme, because we did peak at $69,000 back at the beginning of November, and now we bounced at exactly $42,000 now. So at this point, Bitcoin is a meme, the markets are a meme. So even though we did bounce above this, the reason that we have these outsized or extended sell-offs is of course due to over-leveraged positions in the market. It's just the nature of the market at this point. It's a fact that most people are taking on outsized risk, increased risk because they do want to increase their reward or their potential reward. But of course that does lead to these cascading liquidations, because once people's stop losses are hit, they are forced to close out their positions and sell off, and that creates a cascading sell-off or cascading liquidations in the market, and we see these extended sell-offs. But as long as we bounce up and we get bought up quite quickly, it's actually quite bullish in my opinion. So if we do close above this, we haven't closed above this trend line just yet. In my eyes, I do believe we'll see some consolidation perhaps in towards the end of the year, and then a stronger move back into 2022. And that at this point, we have basically concluded that we do have, in fact, lengthening cycles, and something that we've been speaking about on this channel for many, many months, that the Bitcoin cycles or the crypto cycles as a whole do get longer as time goes by due to changes in asset classes, increased assets. We have tons of different assets this time around. We have yield-bearing assets and so on. So it does change the nature of the market. But even with Bitcoin sell-off, we did see a major sell-off and a sea of red across a variety of different coins. Even in the past 24 hours, we can see most coins are down 20%, 25%, 26%, some even over 30%. But overall, the market is looking okay. These 20% corrections are expected, especially during a bull market. We've had a 60% rise in the past few months without basically any corrections in Bitcoin. So it's pretty good that we are having this correction. It is a dip for buying, in my opinion. So Bitcoin is no longer a $1 trillion asset. Again, it has lost that title just for the time being, but I do believe, of course, we will very soon or shortly, as we head into the end of the year or possibly the beginning of 2022, see a $1 trillion Bitcoin again. Overall market cap at over $2 trillion, very, very healthy. One of the coins, of course, in the top 10 or top 12 at this point that I'm still very bullish on is, in fact, Terra. In the past 7 days, we're still up 36%. I'm going to keep talking about Terra because I do think it is a pretty good ecosystem, and I'm very bullish on the entire DeFi and crypto ecosystem around Terra. Now, before we get into the rest of the video and I talk about what's happening in the market and why I think this move has happened, first, I just want to let you guys know that if you aren't yet, follow me on Twitter. I do have a Discord link in my bio. That is the link to the YMH NFT collection. And I'm running a $50,000 giveaway for that, plus additional NFTs. So we have 25 people winning $1,000 in Ethereum, 25 people winning $1,000 in Solana, and 11 random winners of the YMH NFT. So if you aren't yet, go ahead and follow that and click this Discord link in my bio if you aren't yet. In the Discord, I will be announcing the actual mint date, as well as additional giveaways for token holders and for Discord holders, as well as whitelisting opportunities. So if you do want to be able to whitelist and make sure that you are able to mint, go ahead and check out the Discord. Now let's get into the market. Bitcoin tumbles below $47,000, wiping out October gains. Bear market begins. Now, of course, there will be many of these sensationalist titles. Perhaps even this video will be titled that, because it does bring the clicks, it does bring the views. And if you want to get the valuable information out there, it's just sad that we do have to do clickbait titles and so on to get people to see this stuff. But that put aside, this makes the biggest one-day drop since May 15th, just as I said. But as we see from TechDev here, every Bitcoin cycle in history has ended with a red month followed by 2 or 3 very green months. Now, just again, I will say this many, many times, just because this has happened in the past does not necessarily mean history is about to repeat itself, but it does give us an idea of what could possibly happen. And I tend more to the side of what Raoul Pal says, which I'll speak about later in the video, is that the markets tend to follow the the path of max pain or most pain. And that means that we possibly have a major sell-off before Bitcoin then rips again into new all-time highs. And this means that it basically gets out the weak hands of the market. It gets people to think that the cycle is over, and they start selling off all their coins before, of course, we have this major FOMO hype into the end of the cycle. Now, the cycle could, of course, be very different. Perhaps we don't have 2 peaks like we did in 2014. Maybe we have 3 peaks. Maybe we have 4 peaks. Maybe we have this consistent up as we see in the stock market or the S&P. But we did have, of course, a sell-off in the traditional markets as well. And that's why it leads over to Bitcoin. It simply bleeds over. So this plunge follows a volatile week in the financial markets. Global equities and US bond yields tumbled on Friday after the US data showed job growth slowed in November, and that the Technicron transformer variant of the coronavirus has kept investors on edge. Increase in leverage ratios across the cryptocurrency markets, as well as large holders have been moving their coins from wallets to exchanges. Now, we've seen this in the past when large holders or whales move their coins onto exchanges. Usually that's an indication that there might be a sell-off. Now, whether that is due to these large holders selling off, or whether it's due to people in fear that these large holders will sell off that causes that sell-off, that's pretty much what happens in the market. It's all about incentive and intention as to what happens when these whales move these coins around, and that's where market manipulation comes from, right? They see these whales moving their coins around, everyone freaks out and starts dumping their bags. That causes the market to sell off, and we get this cascade, whether in whichever industry or whichever section of the market it is. People get fear, and that's what ends up happening. So the sell-off comes ahead of testimony by executives from 8 major cryptocurrency firms. Coinbase, the global CFO Alicia Haas, and FTX trading CEO Sam Bankman-Fried are about to testify before the US House Financial Services Committee on December 8th. Now, this is, of course, regulatory issues, regulatory fear. Many people are either capitalizing on the news that there might be some negative outcome from this, or it's possibly just the buy the news, sell the rumor event. Buy the rumor, sell the news event, where people are afraid of what the outcome might be. But regulation, of course, as a whole, obviously not over-regulation, that could destroy the market, but regulation in some extent does help the market, or at least clarification on the classification of this asset class, and gives companies and firms like Coinbase and so on, and FTX, a better idea of how to structure their companies, how to structure their deals, how to approach this market without unintentionally breaking some laws or falling into the wrong side of the law. So this clarification around regulation is actually a very good thing, as long as we don't get over-regulated, which at this point I believe crypto is way too big for that to actually happen. So the US SEC rejected a second spot Bitcoin exchange traded fund proposal from Wisdom Tree this past week. So we did have another rejection of a spot Bitcoin ETF, which in my opinion, I don't think that we need these spot ETFs, but it does help, right? Even us as crypto OGs, we do believe, of course, in the overall decentralization and self-custody and so on of cryptocurrency. But if we're looking in terms of huge institutional players, self-custody and this increased risk doesn't necessarily mean that they want to enter the market. They want to be able to offload some of that risk to counterparties, to custody services to handle that risk for them, so that they don't have to do that. They just simply want exposure to the market, exposure to this huge asset class that is growing rapidly. They don't necessarily care about the overall underlying reason why we have crypto and why we have blockchain. All they want is their money to grow. And that is the case with a lot of people. Many people that I've spoken to don't actually care about cryptocurrency. They don't even know what it is. In fact, a very interesting interaction I had this week when I met someone that had no idea what a crypto was or what NFTs were, and they worked in a coffee shop. So it was a very interesting experience for me to think that because I'm so involved in this world that everybody knows about it, but in fact, it's still very new and most people don't even know what it is. So if anything, this is a dip buying opportunity for many investors who might have felt previously like they missed the boat. We can see Tether bought at a premium, suggesting people are getting cash ready within the crypto space to do just that. So overall, pretty bullish. Of course, it's reliant on traditional markets, but I think this is a dip for buying, in my opinion. I do think that we will see continual rise, perhaps some consolidation for the time being, but perhaps a rise into the next year. So if stocks go down, of course, all risky asset classes like crypto could have another downside move. People are psychologically attracted to placing buy and sell orders at round numbers like $50,000. The same level was prior resistance point, which is now being tested as a new support. And the reason that I have this highlighted here is that it's very interesting, right? These psychological points for any sort of cryptocurrency, whether it's $1, $2, $50, $100. These round numbers generally provide support and resistance levels. But an interesting thing with Bitcoin is that at this point, if it is a meme, maybe $42,000 and $69,000 will be our support and resistance levels, because at this point, those are psychological levels, and most people are thinking about those because, of course, meme. We have presidents buying the dip. Now you're buying 150 coins at an average price of $48,670. Missed the FM button by 7 minutes. We have presidents of countries buying Bitcoin dips still. Of course, there's also the possibility that Zimbabwe will now be possibly getting Bitcoin as legal tender. Now, you might not really care about this, care about smaller countries, third world countries accepting Bitcoin as legal tender, but the fact is that most of the world have currencies that are useless and worthless and dying due to inflation or due to hyperinflation, rather than a stable, solid currency. It's just a fact at this point that most countries have trash currency. So even though smaller countries and countries that you may not even care about are accepting Bitcoin as legal tender, it's actually very bullish news and very good for the crypto market as a whole. So this is what I spoke about earlier in the video. The size of this dump and distribution is likely to mean consolidation into Q1 next year. Moon mission is not dead yet, but some will think the cycle is over. And this goes into say with what Raoul Pal has to say, which markets expect the path of most pain around December. We have a sell-off and then it rips because the path of most pain and markets tend to take the path of most pains, and institutions tend to make asset allocation decisions by quarters, and my guess is January to March next year we're going to see a huge inflow. And this kind of goes in line with what I've been speaking about for the past 2 months around ETH 2.0. So Ethereum 2.0, the merge is about to occur before June 2022. That is what the sort of estimated date that we have. Before June 2022, maybe we have it in March. We see this lead up into the ETH 2.0 hype. When ETH 2.0 launches, of course, the tons or thousands of ETH that are locked up in ETH right now in ETH 2.0 will be available to sell on the market. Now, that of course could lead to a major sell-off or could be very bullish. But in my eyes, if we do have many of these events lining up around the ETH 2.0 merge, I think we could possibly see maybe the next peak in March, June next year. So in my eyes, I think we're pretty good for the end of the year. If you aren't into the market yet, this is a dip buying opportunity. And we have a tweet here from Andrew Chen. Anyone who thinks Web3 is passing fad or a bubble isn't seeing the insane number of very legit consumer startup teams pivoting straight into the space. These folks are experts at building games, communities, social apps, creator economy, etc. 2022 is going to be wild. And this is another reason for these extended cycles that I believe, or lengthening cycles, is that we don't necessarily have this pure FOMO retail hype that is driving the value of Ethereum or the value of Bitcoin. We have economies being built in these ecosystems. We have huge economies being built within Ethereum, for that matter. Even though the gas fees are so high, even though people are complaining about this and slow transactions and so on, it doesn't matter. Economies are being built on these networks and on these ecosystems. And at this point, we have such a mature market. Of course, not as mature as we would like, but we have such a mature market that we have tons of these different assets that could potentially extend the cycle. For example, one of the ones that I believe does potentially have a longer run than most is NFTs, because NFTs essentially don't have to have utility. If we look at from a very baseline point of view, the market, or if we look at apparel, we look at brands, they don't necessarily have these peaks and these troughs. They sort of just grow with time. Nike is an example, Adidas is an example. These brands grow with time, and I'm seeing that hype around NFTs as well, is that people are buying into these assets, not necessarily with the hope that they'll get a return on their investment, but more from an emotional side of view, more of buying into the love for the brand, or the love for Bored Apes, or the love for punks and so on. They're buying into this, and this could potentially stabilize the market, in my opinion, because this ETH or whatever network these people are buying NFTs are is locking that up, and we could potentially see a longer run into the end of 2022 or even further. Maybe we have, like I said, these multiple peaks over time. But overall, I do think next year is going to be incredible for crypto, incredible for NFTs, incredible for gaming, and it's one that I'm very, very excited for. So if you did make it all the way to the end of this video, please comment down below mountain peaks, and I shall see you in the next video. Cheers.